Welcome back to the Cryptoviser podcast, where we talk about crypto, blockchain, investing, and other news in the finance space and how to make money in the cryptoverse and investing world. Hopefully everyone is doing well today. We're going to be talking about Cardano, getting closer to number one in this metric. Also, ICP is vastly superior with their proof of work model, which is a little bit different. And we're going to be talking about that. As I promised, we're going to be exploring the ICP and Internet Computer Protocol over the next several weeks and months as we approach the 2024 Bitcoin halving cycle, because it is my belief that ICP will get out of the top 40 and get into the top 20 over the next year or so. And we're also going to be talking about Bitcoin, Ethereum, T0, and much, much more. So guys, do me a favor and give this video a thumbs up. Remember, I upload every single day of the year since 2018, going almost 5 years strong on this channel. So hit subscribe, turn on notifications, and if you want to help support this channel financially, click that join button down below, or if you're on an Apple device, link in the description of this video, or you can click the super thanks down below, a little heart underneath the video where you can donate to the channel. Thank you guys so much for the support. Let's get into today's news. Starting out, will the Fed policy win could harm Bitcoin's Wall Street narrative? Now, we have been hearing about, Bitcoin on Wall Street and what the Federal Reserve is doing. Is the Federal Reserve, raising interest rates? Is this helping or hurting Bitcoin? Is what they're doing from a money printing standpoint helping or hurting Bitcoin? Well, in my view, as we've covered extensively on this channel, right? To service the debt that we already have in the US, which is in the $31.5 trillion range and rising substantially. And they're about to raise the debt ceiling again, which is going to even increase the debt even more. And the more they do this, the more this mechanism continues and there's no payoff of this debt and it continues to rise and rise, it costs more and more to service the old debt, meaning they have to print more money to service the old debt and create new debt. And it just becomes a cycle that never ends. I mean, even if you look at credit card debt, right? Just Americans and what they're spending. At the beginning of the pandemic, we saw a drawdown in credit card debt here on the debt clock. You can see in the middle of the screen where the pointer is. We were under $1 trillion a few months after the pandemic began because people were paying down some of their bills. They were getting stimulus checks, etc. And what we saw, which was very surprising to me, is we saw an even higher and faster amount of debt issuance and people taking credit card debt, which is the worst type of debt that Americans can take because it has the highest interest rate of, sometimes 25%. So if you're taking $1,000 out, you're paying $250 a day. If you take $100,000 out, that's $25,000, a year. If you take $100,000 out, that's $25,000 a year that you're paying in just in interest. And since the pandemic began, Americans have increased the credit card debt from under $1 trillion to 1.2, almost $225 trillion, right? That's a $200 billion plus increase just in the debt. That's not including student loan debt, not including mortgages, etc. And what we are seeing here is we're starting to see bankruptcies creeping up, foreclosures starting to creep up. And, people living in poverty, 42.5 million Americans, people living without insurance, 27 million Americans. And these numbers will continue to rise. And this gap between the wealthy, the 1%, the middle class, and the lower class will continue to widen. And really what you have to do is you have to get ahead of it. And in my view, there are a few ways to do it, and this is through wealth creation. Most people look at wealth creation as buying a home. I do not think that this is the way to do it because it ties up a lot of capital and it puts you back in debt. Crypto and stocks, these are non-debt instruments, right? You're not putting yourself into debt to own these items. A home, I get it. I understand. For some people, home ownership is the number one way to, invest. That's the way that they view it. For me, I don't view it that way. Even if you're paying rent, which may be a little bit higher than owning a home, you're not locked into that home. You don't have all of the other expenses that may come up. If a pipe breaks, if you have to replace something, if something else happens that insurance doesn't cover, these are actual costs that are associated with home ownership. And people are like, yeah, but Cryptoviser, otherwise you're paying somebody else's mortgage off. And you don't have money tied up and you're not in debt. Debt essentially locks you in to, not being able to get out of the debt, right? Not being able to free yourself financially and be able to do what you want. And by buying cryptos or Bitcoin, and again, not financial advice, this is my opinion and my investment thesis and strategy. By buying these assets, especially where we are now in 2023 in a bear market, or in my view, towards the end stages of the bear market, this is a great opportunity to potentially increase your wealth. Now, obviously, you have to be able to understand the risks involved. You have to be able to understand what your investment strategy is. Are you investing for 30 years down the road? Are you going to be trading this market? Are you going to be buying and then selling when the markets go up 5, 6x? Either way, this is an opportunity to increase your wealth. And as we know, the Federal Reserve is going to keep printing and printing and printing. The debt is going to keep going higher and higher and higher. And this is not going to stop. And if you understand this mechanism, you will understand very clearly where you need to position yourself in these markets and that you have to get out of debt. Because the more you're in debt, like I said, the more it costs to service that debt as time goes on and on and on. Because the thing is, if you're in debt now and you're not paying it off, you're going to keep paying off that debt, and the interest rates are going to continue to, basically eat into whatever you are paying off. And by having that other debt, it's removing opportunity from being able to invest in appreciating assets. Cars are depreciating assets. Homes are appreciating assets, although it locks you in for a 30, 40-year mortgage, right? Where you're stuck paying a certain amount. And if something happens, like I said, a pipe burst or whatever. Now, this kind of goes into the whole conversation. Is Bitcoin the answer? We've been hearing from a lot of people recently that they don't think that Bitcoin is the answer. Jim Cramer, Charlie Munger, Ray Dalio. And meanwhile, we are literally in the bottom stages of the bear market, right? We are at the bottom of the bear market. Like there's only so much. Granted, we can go to zero, but I don't think that we will. As I said over and over, that I think that the FTX collapse in 15,500 was the bottom of the market. So yes, we could go lower, but I believe that we are at the bottom of the bear market, and now we're going to start moving up into the bull market, which is probably going to be 2024 into 2025. So all of this talk about, well, Bitcoin is not the answer. We got to stay away from Bitcoin. Don't invest in Bitcoin. You're going to lose all your money. It's like people already lost all their wealth in Bitcoin last year. Now is the time to accumulate in the bottom of this bear market. So Charlie Munger hasn't taken the time to study Bitcoin, according to MicroStrategy's Michael Saylor. And by the way, we are going to be talking about Cardano in just a little bit, an internet computer protocol, as well as T0 and Ethereum. So make sure you guys stick around, and don't forget to give this video an absolutely free thumbs up. So, Michael Saylor, you guys know he's the founder and CEO of MicroStrategy. He said that he's sympathetic to Charlie Munger's broad crypto criticism, and he called out the thousands of non-Bitcoin tokens as little more than avenues for gambling. He obviously, Michael Saylor, is a Bitcoin maximalist. However, Saylor said if Munger were a business leader in South America or Africa or Asia and he spent 100 hours studying the problem, he would be more bullish on Bitcoin than Michael Saylor is. The plight of the common man, according to Saylor, is better illustrated by recent events in Lebanon, Argentina, Sri Lanka, Nigeria, and Venezuela, where local currencies have plunged in value. Now, talking about Sri Lanka, their central bank actually says that Bitcoin cannot solve their economic crisis. According to billionaire Tim Draper, he said that basically he's got a more challenging reception. He was in Sri Lanka this past week talking to local entrepreneurs about crypto adoption. He met with the country's president as well regarding the matter of Bitcoin. Draper went to the country's central bank to present the same pitch. However, the governor of the central bank, who is still working on fixing the nation's financial challenges, did not embrace the idea of Bitcoin. The central bank governor responded that Bitcoin adoption in Sri Lanka would not be a 100% reality. He said that introducing Bitcoin would worsen the crisis. Therefore, they're still deciding to take that route. The government official stated that other technologies could be effectively used in financial services to promote social inclusion and quickly disperse funds to those in need. Draper described Sri Lanka as a corrupt nation during the meeting and fronted crypto as a solution. He argued that Sri Lanka, a country known for its minimal mineral resources, could have addressed its corruption by keeping perfect records through Bitcoin adoption. Last year, Sri Lanka faced the worst ever economic crisis in its history, which drove prices up and caused shortages of food and fuel across the nation. As a result, such difficulty stirred protests that forced the president to flee the country and later announce his resignation. So again, we're hearing this happening in many areas of the world. A lot of this does have to do with the US dollar being hyperinflated and money being printed and printed and printed. But we hear a lot from maximalists like Tim Draper, like MicroStrategy's Michael Saylor, et cetera, that Bitcoin is the answer. Bitcoin is the answer. Bitcoin is the answer. It's the answer to the Federal Reserve policy. It's the answer for Wall Street. It's the answer for Sri Lanka. It's the answer for economic freedom and all of this. Well, is it really the answer, right? Bitcoin is very small relative to many other industries out there. Although we're still in the nascent phases, we still don't have full regulatory clarity. We don't have corporations putting it on their balance sheets on a large scale just yet. When this does start to happen, we will see a lot more money flowing into crypto. But again, we know how these boom and bust cycles work, and it's very hard to manipulate actual Bitcoin, and impossible, at least at this point, to manipulate the Bitcoin network. And this is very different than stock markets around the world. So stock markets, while they do have boom and bust cycles, they're not to the degree that Bitcoin is. I mean, we saw countries like El Salvador, we saw Michael Saylor's MicroStrategy buying literally at the top of the market instead of buying in the bear market, right? We month over month from 2020 to 2021, we heard MicroStrategy was buying Bitcoin, thousands and thousands of Bitcoin. And this turned out to be about $4 billion in Bitcoin that they purchased. And now that is worth less than half of their purchase price for MicroStrategy in itself. This is not a great, first example for buying Bitcoin for institutions, for corporations, et cetera. And while I do think that Michael Saylor has a longer term strategy, these boom and bust cycles, how they work, they basically put immense pain, right? Everybody over the last year, 2022, everybody felt significant drawdowns in their valuations in the stock market, in the crypto markets. We had a lot of scams and lending and borrowing schemes come unwind, and people lost a lot of money in these things. And this takes away a lot of the confidence in these markets and in the ability to utilize cryptocurrency as a hedge against all of this hyperinflation and stuff like that. So people like you and I, investors, right? None of this is a surprise. At the end of 2021, even in the beginning of 2021, I told my viewers on this channel, you can go look at my videos. I said, guys, we are not going to be in a bull market forever. This bull market is going to end by the end of 2021. Sure enough, beginning of 2022, I called, okay, we're rotating into a bear market. Nobody wanted to hear it, right? New investors that never invested in their life, they didn't want to hear it. Long-term investors didn't want to hear it. And unfortunately, a lot of these people lost significant sums of profit because they did not even want to take out some of their profits. Now, this is everyday retail investors, right? Michael Saylor and MicroStrategy, they didn't sell any of their Bitcoin that we know of during the bear market. I think that they did some dollar cost averaging and tax loss harvesting towards the end of 2022. But for the most of the bear market, they didn't do any selling, which is also very surprising. El Salvador didn't do any selling that we know of. So they just took losses. Now, granted, these are unrealized losses, but to other countries that are like, okay, are we going to put our citizens on the Bitcoin standard? Because a lot of people look at it as like a light switch. Like El Salvador is not doing it like a light switch where they're just going from the dollar to Bitcoin. What they're doing is they're giving people the ability to convert their dollars into Bitcoin and transact in Bitcoin. Now, whether this is a large number or a small number, if you think about the evolution of the credit card, evolution of the check, evolution of online banking, at first it was an option, then they started slowly incentivizing usage of it, then they started pushing more of their customers to it, then they made it more difficult to utilize the old system, like think about paper checks. Most places don't even take paper checks anymore. So you can still pay in paper check, it's just much more difficult. Now some places it's becoming even more difficult to pay in cash. You have to pay in credit, or you have to go and convert the money, or they don't have change, or whatever the situation is. They're making it more and more difficult. Most sports stadiums in the United States, they're cashless, where if you want to pay with cash, you have to go to one of the reverse ATMs that they have in the stadiums and put your cash in, and then they give you like a debit card that you can use anywhere that the debit card's accepted, and that's how you pay for things inside the stadium. This is a conversion, right? Whether you want to pay with a credit card or not, or a debit card or not, you're going to be forced to eventually. We're starting to see the conversion to digital payments with Apple Wallet, Samsung Wallet, Google Wallet, and all of these things. And a lot of the stores are now accepting these type of payments. This is a transition, how it's happening, and this is how I think it's going to happen with crypto as well. But these countries really do have to look at, is this feasible for us to move our people into this currency that is still highly volatile? As you guys know, I believe as time goes on, as the market cap continues to increase in Bitcoin, while we will still have large movements in the prices in the markets, I do think that as more investors get involved, more Bitcoin is locked in, because again, limited supply, we will see less and less volatility through the course of time. We're already starting to see that happening. And this also, as Ray Dalio is saying, that Bitcoin is not the answer. And obviously the community responded that it is. But, I mean, guys, we talk about this all the time. When people are like, oh, global warming, and people are like, well, Bitcoin can fix this. It's like, how can Bitcoin fix global warming? Plastic in the ocean. Well, Bitcoin can fix this. Starving people in the world. Bitcoin can fix this. It's like Bitcoin cannot fix everything. Bitcoin is not this like godly thing. It is a currency, in my view. It is a very hardened technology. It's a new invention. There's a lot of positive things about Bitcoin, but Bitcoin is not the answer for everything in the world. And this is the first answer that a lot of Bitcoin maximalists give, that, oh, well, Bitcoin can fix that. Like your car doesn't work? Well, Bitcoin can fix that. Oh, you're hungry and you have no money? Well, Bitcoin can fix that. It's like, how? If I have no money and I have no Bitcoin, how is that Bitcoin going to fix it, right? So this is where you guys really have to filter during this bear market. What is fact versus what is fiction? What is fact versus what is hopes and dreams, right? And you can have hopes and dreams, but really what we do on this channel is we talk about real investments and where our investments with the highest can get the highest reward with the lowest amount of risk. I do believe Bitcoin is that compared to everything else that I've seen, from stocks to other cryptos to altcoins. I believe Bitcoin is the most hardened, safest asset to be in, to counter all of the corruption, to counter all the fraud, to counter all the financial instability, to counter all of the debt that's being created on a much higher basis. I think that Bitcoin is it. Is it the answer to all of our problems on Earth? Probably not. But I do think that there's a lot of positive things here coming from Bitcoin. And Nigeria, we've been hearing that they have a Bitcoin premiums, and this may better reflect the country's demand for the dollar, not for actual crypto. This is also very interesting because if you think about it, the more dollars are in demand, everything that is required to pay for in dollars goes up, right? And that may be, this is not 100%, but Nigerians, people in Africa, they're paying more, a premium for Bitcoin. And this is probably more from the stability of the US dollar than for Bitcoin, according to an analyst telling CoinDesk. Now, in previous bear markets, a lot of these publications, they don't talk about previous cycles. We talk a lot about historical data having to do with where these market cycles go. This is how we were able to call the top of the market in November of 2021. This is how we were able to call the bottom of the market at the FTX collapse. This is how we're able to call the recent pumps in the market that I believe are going to be going on for the next few months. Guys, these are based on cyclical historical trends, based on where we are in the halving cycle. It's very easy to understand, very easy to conceptualize how this is all going to play out. Are we going to have volatility? Sure. But are we going higher in the short term and even in the long term? Absolutely. And, understanding this, we also can look back at the 2018, 2019 bear market, and we also saw very high premiums in many parts of Africa during that period of time as well, because they don't have the infrastructure that we have with like Coinbase and Gemini and Binance. Like, they don't have that kind of infrastructure. They don't have central bankers. They don't have a lot of the people in many parts of Africa don't even have, access to traditional financial systems the way that, the quote Western world or Americans and people from Europe and Asia have, right? So understanding that this has happened historically, yeah, we're just going through cyclical trends, right? This is going to happen. We're going to see Korea is going to have premiums. It's called the kimchi premium at some point in the future as well. Understanding this, it can kind of help guide your investment thesis and strategy. So it's really important that you guys understand how these cycles work. Research how the previous cycles work, and it's not that difficult, right? You can look here on YouTube. You can look at articles from 2017, 2018, 2019 on what was going on in the markets, and you can just go to the charts and look how the markets were working, right? What was the price of Bitcoin in Nigeria in 2018 and 2019? Go look at the historical data on that. Go look at what the cycle looked like after the 2017, 2018 bull to bear market. This is the same exact thing that we're going through right now. From literally from top of the market in 2021 to bottom of the market in 2022, it was exactly 1 year to the day. We called this at the beginning of 2022. I told you guys at the beginning of the year, in the videos that I was explaining that I selling my crypto, people were like, "Cryptoviser, we're extended cycle." This YouTuber saying that we're going much higher, and meanwhile, June, which was the extended cycle top, supposedly was actually the bottom for pretty much every coin except for Bitcoin. Bitcoin bottomed after the FTX collapse. And then everybody was talking about FTX and Sam Bankman, and everybody missed the bottom. Like literally I would say like maybe 2% of YouTubers out here were telling their viewers we're at the bottom of the market in November. And even in December, most started coming around at the end of January and started saying, okay, we hit the bottom. It's like, where have you been the last 3 months? Oh, right. Obsessed with Sam and FTX. And this was 98% of YouTubers and influencers, even Bitcoin maximalists, right? And that was an indication for me that we were at the bottom. Now, moving on to Cardano. Cardano is getting closer to number one. And this with the launch of the DJED stablecoin. Now, first, I wanted to bring you guys this news. By the way, don't forget to give the video a thumbs up if you like this kind of content. Click subscribe, turn on notifications. And if you want to help support the channel, use the super thanks, the little heart underneath the video, or you can click the join button down below to learn more about becoming a channel member. Thanks to all of the channel members, everybody who's recently joined. Appreciate all your support. We're going to be working on some big things for the future for our members. Anyway, moving on, Cardano's DJED depegs, and this reignites stablecoin backing debate. Now, there's been a lot of talk about this DJED stablecoin. I've been very skeptical of what is going to happen with this because it is an algorithmic stablecoin, or like the Cardano community is calling it, an over-collateralized stablecoin. Earlier in the week, Cardano's recently launched stablecoin DJED lost its peg to the US dollar, drawing attention to the importance of regulatory frameworks governing stablecoin reserves. On February 2 of 2023, they have the wrong year here, obviously. After I don't know what that word is. Anyway, after the DJED release, Cardano's over-collateralized stablecoin briefly dipped below the $1 mark, around 97.5 cents. Stablecoins lose their value when their issuer does not hold sufficient liquid reserves to honor withdrawals. So coins like DJED try to avoid bank-run scenarios during times of market stress by overbacking their coins with liquid assets. In this case, the liquid asset is Cardano, ADA. The circulating supply of DJED is currently worth $1.8 billion, backed by $12 billion worth of ADA. Is it really that high? Well, let's take a look. I pulled up CoinMarketCap. Here we go. So this is probably, wow. $1 billion fully diluted market cap. So that has to be backed by 400 to 500% of ADA, right? So that means that they have $12 billion worth of ADA. That doesn't make sense. That doesn't make sense. The market cap of Cardano right now, when I'm recording this video in the beginning of February, Cardano's market cap is $13 billion. So how is this backed by $8 billion worth of ADA? Maybe I'm missing something. Maybe I am missing something. Let's look at Explorer.io. This is the Cardano Explorer. This shows you all of the staked ADA on the network. And you can see right here, there's 25 billion ADA. And at the current price of 40 cents, let's do the math here. So 25, we'll just say 25 billion ADA, okay? That's billion times 40 cents. That's $10 billion of ADA is locked in staking, right? So $10 billion worth of ADA is locked in staking. And now they're saying that $8 billion is basically backing DJED. That means it's $18 billion. How is that even possible? Guys, I don't know the answer to this question I'm asking, so if you guys know, please let me know down below in the comments of this video. If we go over to DeFi Llama, Cardano, the reason I made the title that Cardano is inching closer to number one, because Cardano was number 30, then it was 28, 25. So we're moving up the chain. This is all the DeFi protocols by total value locked in dollar value. And Cardano is now the number 24 protocol. So still has a way to go, but it's on its way to number one. Now you can see Dejed, okay, so this is in million, not billion. But it says here on Dejed, the fully diluted market cap is 1 billion. Maybe it's supposed to be million. I don't know. Or maybe it's $1 billion in actual ADA. Listen, I don't know. Maybe I'm missing something. But it says the total market cap is 1 billion. It's fully diluted. So the asset backed is about 800% or 400%, something like that. So that would be $4 billion. I don't know. Maybe I'm doing the math wrong. I don't know enough about the Dejed. So you guys let me know. I'm just kind of bringing you the news and bringing you what I'm seeing here. So according to DeFi Llama, there's about $12 million locked in to Dejed. Now this sounds more accurate than what CoinMarketCap is showing. I don't know why CoinMarketCap is showing $1 billion. That doesn't make sense from a numbers standpoint. So yeah, you can see the number of ADA locked is about 32 million. This sounds way more accurate than what CoinMarketCap is showing. Way more accurate. 32 million ADA, that's over collateralized. 32 million, let's do the math. 32 million ADA, and you multiply that by 40 cents, and that's about $12.8 million. Yeah, so that's over collateralized. So right now we're at $12 million worth locked into Dejed, and about 32 million, so just a little bit over 2.5 times what the current market cap is what is locked into the protocol in terms of the ADA coin. So what this is doing, from my understanding, the whole idea behind Dejed is to increase the abilities of Cardano DeFi. Now, whether this stablecoin is going to work or not, I don't know. The depegging to me, and again, I don't hold any ADA when I'm recording this video, but to me, the depegging is not that big of a deal, because look right here, we went down to 98 cents or 97 cents, and then we went up to $1.02. So there's volatility. If you look at USDC, it's a little bit more stable, but at times you'll see USDC dropping down to 99 cents or going up to $1.01. Tether also depegs fairly regularly, especially during times of volatility, where you'll see Tether coin. You can see right here, Tether went down to 99.5 cents the other day. If we pull back the month, you can see big moves, right? Up to $1.04 on January 30th, down to 98 cents on January 26th. So this is generally during times where people are redeeming or minting new coins that you'll see this volatility in the actual price of the coin. But to me, 1 or 2 cents for a few hours, you can see it just depegged. Now it's at 99.9 cents. This is not a big deal, right? This is how stable coins operate. If your dollar actually depegs from the actual dollar and your dollar is no longer worth $1, you're not necessarily going to feel it if it goes from $1 to $1.01 or $1 to 99 cents. You're not going to feel that. Same thing here with Tether and other stable coins. You're not going to necessarily feel it. So for me, the depegging is not that big of an issue. Now, if we start to see depegging where it maintains a depeg for more than a few hours or more than a few days, then we go into the territory of we probably have an issue here, right? So again, I don't know if this article is 100% accurate with their numbers. I'm more focused on what the story is, which is the depegging versus the numbers. But if you guys can explain why even CoinMarketCap shows fully diluted as $1 billion, please let me know, because I don't understand how that's actually possible that they have $1 billion in market cap when there's not even that much, not even close to that much locked in the protocol. So what Dejed is doing is it has increased literally overnight the overall total value locked on the Cardano ecosystem by about 20-25%. Maybe a little bit less, maybe about 15 to 20%. And that is because you're seeing more money flowing in to back the stable coin. And then you're going to also see more transaction volume on the DeFi chains. Essentially, creating the JED is actually printing money in a way because you're locking coins into the JED stablecoin, and then it mints the stablecoin, which technically is backed, but then you're creating more money in the DeFi ecosystem to be transacted. Now, again, I do believe that Cardano needs interoperability. As you can see, none of the protocols built on Cardano have any interoperability. They're all just built on Cardano. These two for Muesli Swap. These are Cardano protocols, but everything else, there's no other interoperability. If we had interoperability with Tether, with USDC, I would imagine you would see the total value locked on the Cardano ecosystems considerably increasing because you don't like bigger traders and bigger people who utilize DeFi, and I'm talking about like bigger money, right? They don't want to be locked in one protocol with everything on the line, right? With Tether and USDC, you at least have your bridging from another protocol into Ethereum, into Solana, into whatever protocol you're talking about in DeFi. Where with Cardano right now, you are locked into the Cardano ecosystem. So if there's a major situation on Cardano, well, your money is completely gone. If you look at Polygon, there's a lot of interoperability. So you can put money into Ethereum and then bridge it over to Polygon. You can put money on Avalanche and bridge it over to Polygon or bridge it over to Ethereum or vice versa. And this is why interoperability is so important, because it brings more value and it brings more ability to transact with these other blockchains into a closed because right now Cardano is a closed ecosystem because you can only transact in Cardano DeFi with Cardano based coins. And this is not how any of the other major chains that are above Cardano are operating, right? At this point in time, we've had DeFi enabled on the Cardano blockchain since about September of 2021. So about about 1.5 years since then. And Cardano has significantly less DeFi than many of these other protocols. Now, it is still growing. Like I said, we're on our way to number one. But to get to number one, there has to be interoperability. It has to be. And this is one of the reasons that I'm not holding ADA at this point, is because these other protocols like ICP, Internet Computer Protocol, Polygon, and we're going to get into Internet Computer Protocol in just a few minutes here, Polygon, Ethereum, Solana even, they all have interoperability. They're all able to bridge from one chain to another. Now, people are going to say, because people have wrote this in the comments, well, Cryptoviser, if you build a bridge, then you can get hacked. Okay, guys, you can't stay in a bubble and expect the bubble to keep growing and growing and growing. Eventually it will pop, or there is a limit to how big the bubble can get, right? Or I should say balloon, because bubble, you guys are going to freak out. It's, oh, you're calling Cardano a bubble? No, but what I'm saying is, with Cardano's no interoperability, the Cardano ecosystem is in a bubble. They're in a bubble by themselves instead of interoperating, connecting to these other chains. And we've been promised this for years, and I don't understand why we don't have it yet. This should have been developed before stablecoin introduction. But now that we have DeJed, is DeJed going to bridge to other blockchains? And if it is, when is that going to happen? And if it's not, what else is going to bridge to other blockchains? I don't know why, Cardano isn't bridging with USDC. It's not a money issue. Why is it not bridging to Tether? It's not a money issue. Why is it not? I don't know what the answer is. I would love to see Cardano moving its ranking much, much higher in the DeFi ecosystem. But I think that for it to get to even close to number one, even in the top 10 or top 20, Cardano needs interoperability. It just 100% needs it. So I don't know how much further up we're going to go, right? I mean, $12 million locked into JED. This is a lot of money, especially in just under a week, right? I'm recording this less than a week after JED launched. So this is a lot of money that was pushed into the Cardano DeFi ecosystem, into the stablecoin ecosystem, and to back it. But it's still not, it's not that much, guys. So we need to really get to number one. We need interoperability. I think you guys would agree with me on that. When it's going to happen, I don't know. This is hopefully what we'll see coming in the coming weeks and months, because I would imagine that if we see interoperability with many of these major protocols, especially with Ethereum, especially with Polygon. Once you bridge to Ethereum, you can pretty much bridge to every other protocol as well because Ethereum is interoperated. So you'll be able to move ADA into Ethereum or Ethereum into ADA or Polygon into Ethereum, then to ADA. You'll be able to move value very, very easily. And I know Ethereum is a competitor, but like I said, Cardano cannot operate in this bubble and expect it to grow to number one. But if Cardano is able to get interoperability launched this year in 2023, and have it running before the next bull run in 2024, I would imagine that we're going to see Cardano pumping into the top 20 and possibly even the top 10 of total DeFi ecosystems in the world. And that would be very, very bullish, extremely bullish for the Cardano ecosystem from a monetary standpoint, from a valuation standpoint, and also from a usage and adoption standpoint. Because remember, during the bull markets, really where the value flows and where the money moves and where we see these large movements in the price comes from volume. Volume, volume, volume. And the major chains with high volume will have it. Now, some people, there's a lot of critics of Cardano that say that Cardano can only handle a very low amount of transactions per second. During the bull run in 2021 into 2022, we saw, the peak was like, I think like 50 transactions, 100 transactions per block, which is a block is a few, I think 30 seconds or something like that. So 50 transactions, that's like 2 transactions per second. Now, I don't know how many people are actually using Cardano to like increase that, but I would imagine that it would be fairly easy to increase the throughput of Cardano through scaling solutions or whatever. But maybe that's what's holding the interoperability back. Again, I don't know. I'm an investor. I try to figure these things out and understand these things so that I can understand where I need to position my portfolio. But if you guys have the answer, let me know down below in the comments. You could also DM me on Twitter. I'd love to hear your viewpoint on this. But right now, I mean, we're in a bear market, so everything is low volume. But when we go in a bull market, the volume is what dictates where the price goes. So if we have 10 protocols that have significantly higher volume than Cardano, Cardano is going to be flipped. And if Cardano has significantly higher volume than other protocols, Cardano is going to flip these other protocols. So this is why I'm kind of sitting by and waiting to see what goes on with Cardano over the coming months, specifically from an interoperability standpoint. So with that, let's move on to Internet Computer Protocol, one of the most highly requested topics on my channel. And yes, I do hold ICP. I do believe that ICP is going to be one of the top 10 cryptocurrencies, most likely a top 20. I don't know about top 10. It really depends on, again, what else goes on in these markets because there's so much competition now between these different protocols. But I definitely think that we're going to see ICP right now. When I'm recording this video in February of 2023, Internet Computer is in the top 40. It's literally number 40 with a $1.67 billion valuation, just under $6 per coin. And I believe that we are going to see this significantly increase over the next year or two because there's a lot of excitement about ICP. A lot of new investors are exploring ICP, like the Cryptoviser and many of you guys. And I think that a top 20 is going to be a very easy goal for ICP over the next year or so. Now, before we get into this convo about ICP, I just really want to say that the thing that I'm most excited about for investors of ICP, especially early investors who got screwed on ICP, is the opportunity for these investors to turn around their ICP losses into gains, right? When I first started covering ICP, it was at the launch where it was being listed on many different exchanges, and we saw the price go from $400 at launch to about $800. And there were a lot of people who were FOMOing into this. I saw the comments on my videos. Some people were saying that they bought in at $600, $800. And, some people, that's all the money they have to invest, and they're buying one coin, and then the coin starts tumbling. And I said, okay, when it goes under 100, we'll start to look into this and see if this is something we want to add to our portfolio. Then it went under $100. I said, okay, we're still moving down. Let's wait till $50. Then we hit $50, and then we went up a little bit to $70, $80, and then we kept going down. And essentially, this has been a 99% drawdown in the price since launch. And now we know that FTX was behind a lot of this. We know that FTX was manipulating the price, not just of ICP, but of many different coins. Anything that FTX had what's called perpetual swaps. It's synthetic coins that they were trading. It's basically the equivalent to like the Bitcoin futures. Bitcoin futures is not real Bitcoin, and Bitcoin futures allows the big money to go in and manipulate or attempt to manipulate the price of Bitcoin. And this is SEC approved and everything. Meanwhile, they won't approve a regular Bitcoin ETF, but we have Bitcoin futures ETFs because it doesn't touch the actual Bitcoin. It's all paper trading, fake trading, synthetic coins. So with ICP, this was perpetual swaps on FTX. Cardano, perpetual swaps on FTX. Bitcoin, perpetual swaps on FTX. Litecoin, perpetual swaps. They did not list, think about it, guys. The major cryptos, the number one cryptocurrency, they had zero Bitcoin when they went bankrupt. They had zero Bitcoin. And it's my belief that every time somebody deposited Bitcoin onto the exchange, they immediately sold it and converted it into their shitcoin, FTT or Solana or Serum. And that's what pumped the price of all these other coins. So they essentially didn't list Bitcoin, they didn't list Litecoin, they didn't list Cardano, and they didn't list ICP. It was all perpetual swaps, fake synthetic coins. This should have been a huge, huge red flag. I mean, guys, I definitely made videos. You can go back and look. I definitely made videos where I thought it was very, very odd that FTX was listing perpetual swaps, but they wouldn't list the actual coin. Because the only reason that you would list perpetual swaps or Bitcoin futures and not the actual crypto is because you want to manipulate the price. You know, we have the SEC chairman saying that they don't want to approve Grayscale converting to ETF because there's manipulation in the Bitcoin markets. But meanwhile, they're allowing Bitcoin futures, which is paper trading. It's fake. It's fake trading. So yeah, I mean, I see this as an opportunity for investors to make it get right with ICP. Now, I'm not saying that they're going to recover all of their losses, okay? But this is the way that I view it. If you bought one coin for $600, you're now at zero essentially, okay? But if you take $600 and you divide it by, let's just say $6. Okay, we're at 587. We'll just say $6. That means you now have 100 coins. If we go to $50, okay, 100 coins times $50, you're now at $5,000. Okay, so you would recover your initial investment, $600 at the $6 price. You would recover your $600 that you lost at the launch, and you would essentially be up $3,800. Okay. Now, are we going to go to $50? I think a 10x for ICP is very, very possible, because the other thing that you have to remember is a lot of people who bought at this $500 or $600 range, even $800 range. And I know there's people who watch my videos who bought at $600, $700 in ICP. And they're stuck, right? They're locked in. So most of these people who bought anywhere over $100, they haven't sold yet. And most likely they're not going to sell until we go back over $100. Otherwise, they're just taking a huge loss, and it doesn't really matter. I think there's more people holding than there are people selling into losses. So this is essentially coins that are locked, right? Similar to Ethereum coins that are locked in the deposit contract, Cardano coins that are not locked in staking, but where we know where they are, or Bitcoin that is lost forever, right? Those coins essentially are out of circulation for the current moment. So if we go to $50, that's still 50% loss from $100 if they were, if the dollar cost average was 100. So I think those coins are still going to be staying put, and people are not going to sell into those losses. So in my view, this could be an opportunity. Again, not financial advice. I'm going through the math with you. If we 10x from where we are, it's actually less than 10x. It's like nine times, 900% increase from $6 to $50. And you put in $600 or whatever you put in originally into the price, you will make your money back plus some, right? And I'm just using that $600 as a general number. And I think that this is, is it risky? Yeah. But if my prediction and thought comes true that ICP will enter the top 20 in the bull market, which is just a little bit over a year away, there's no doubt we're going to hit $50 in my view, right? I could be wrong. So make sure you guys do your own research. I'm not telling you what to do in your investment portfolio. I own a very small amount of ICP. It's not even in my top 3 coins that I own. So it's a very small amount. I'm going to continue to dollar cost average in over the next year or so. But I think that this is a great opportunity if you lost money in it and you still believe in ICP and you still want to make money in ICP. This could potentially, from the math that we're doing on screen, this would make sense. So I'm going to do the math again. Let's say you originally put in $600 and you're basically at a 99% loss right now, right? Because it went from $600 to $588. So let's say you take another $600 and you buy ICP at $6. That means you're going to have 100 coins. Okay, now let's say ICP goes to $50, 50. That's about 9 times where we're at today, right? 9 times 6 is 54. So we'll say 50, about 8.5 times. Okay. So if you have 100 coins and we go to $50, now you have $5,000 minus your initial investment of $600, and then minus your $600 that you bought when the coin was $600, right? $1,200. Now you made profit $3,800. Now again, this is if the coin goes to $50. This is if you invest $600 and if you already invested $600 and it's a total loss. I'm going through the numbers. I don't know that this is going to happen. This is not financial advice. I'm not telling you what to do. I'm just going through the math with you. So make sure you understand what's right for you. Make sure you understand what's going on with ICP. So let's learn a little bit about ICP now that we talked about the price for way longer than we probably should have. But anyway, by the way, don't forget to give the video a thumbs up and hit subscribe. Proof of useful work is vastly superior to other consensus mechanisms. And this is the consensus mechanism that ICP uses. Internet Computer utilizes consensus protocol called Proof of Useful Work, or POUW, which is highly advanced mechanism that is far more efficient than the consensus methods used by other first-layer blockchain networks. Most layer ones use proof of stake, like Cardano, Avalanche, Algorand, Ethereum, Tezos, and Peercoin. On the other hand, other chains use proof of work, right? So the blockchain industry introduced proof of stake, yada, 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 yada. So last year, an incident where a German cloud service provider banned Solana nodes caused a 40% network outage and broader conversation in the community about growing influence of centralized service providers in a controlled, decentralized blockchain networks. And this happened with many different chains as well. Many different chains utilize Amazon Web Service as their hosting provider. So if Amazon shuts it all off, that's a huge issue, right? So it's clear that any network running in the cloud is very different from a sovereign network built by participants and members of the network, exposing how inefficient proof of stake is. The flaw is why Internet Computer has stepped up with more complex and advanced proof of useful work mechanism. The mechanism involves a blockchain produced by dedicated hardware called node machines with similar standardized computational specifications. These node machines run a highly sophisticated consensus protocols that leans into the power of advanced cryptography, often referred to as chain key cryptography. Members and participants of a blockchain network establish membership by selecting dedicated node machines in proof of useful work. These machines are not used for hashing, but for producing and processing blocks of transactions that represent smart contract computations. They are built to the exact standardized specification to ensure that the node machines perform equally the same amount of computation and do not deviate from the group. Instead of competing to perform more computation or hashing, they aim to achieve the same amount of computation, and deviation from this can result in termination of that actual machine. So then it goes a little bit more into it. Dominic, the founder of ICP, said proof of useful work produces a blockchain that's 20,000 times more efficient than the best proof of stake chain today. Yet it's hosted by a secure and sovereign network of dedicated hardware with zero corporate cloud, just like Bitcoin uses mining rigs to produce blocks. So this removes the ability for these large corporations to just shut down a network. I mean, literally, if Amazon Web Service shut down crypto providers, which I don't think that they will because they're getting paid to be the cloud platform for them. But if they did, this would immediately cause significant issues in most of the major proof of stake chains, most of them. And this would cause mass panic, and this would cause probably a run on the banks, and we would see valuations significantly plummet. This is a huge issue that proof of stake chains generally are not talking about, and this is a huge risk to your capital that you have in these coins and in these blockchains. And this is why proof of useful work is different. Because of its sovereign nature, the network is composed of dedicated hardware that's free from the interference of corporate clouds or entities. This deterministic decentralization of the NNS results in a highly efficient network created and maintained by its members, resulting in a completely decentralized blockchain. And that is what ICP is. So essentially, ICP is the Bitcoin network of the proof of stake model. This is very different than what other chains are doing. And this is one of the reasons that I'm so bullish about ICP, right? This is why I believe in the ICP protocol. The more I learn about ICP, the more bullish I get. And by the way, when I first started covering ICP, when it launched on most major exchanges, I told you guys, like, there is something to this internet computer. If they are able to accomplish what they say, and if they're able to build their network the way that they want, there's something to this chain. This whole launch, it really screwed the project from an investor standpoint, from a community standpoint, because people didn't know what the hell was going on, and we didn't know the extent of the FTX manipulation at that point. Now that we do, and we learn more and more about what ICP is, what their proof of useful work is, why this network is superior to many of these other networks out here. It's clear to me that we need to continue to learn more and more about ICP. That way we can make a sound investment and make this part of our investment thesis and portfolio as we move forward. Again, this is my investment strategy, my investment thesis. You guys have to do what's right for your investment strategy and thesis. But I'm going to continue to cover ICP, and we're going to continue to learn about it the way that we're learning about it today. Piece by piece, little by little, and this is exactly what I did with Cardano during the 2018-2019 bear market. We learned about everything having to do with Cardano. We learned about the good, the bad, what they were trying to produce, what their vision was, what the entities were working on. And this is why I was so bullish for Cardano, because there's so much there. You know, obviously there still is, but it's obviously we're in a different realm of competition now, right? And this is why I'm exploring some other different chains as well, like ICP. So if you're holding ICP, let me know. Now I'm going to cover this more in depth on another video, but T0 is sunsetting T0 crypto app amid regulatory challenges. Now we haven't really heard from T0 in a while. If you guys have been following my videos for probably multiple years, we did cover T0. This is one of the 2017, 2018 like new coins that came out. We haven't really heard anything about it since it launched. But we're going to be covering this in a future video because I am going over on time and I don't want to take up too much of your time, but I appreciate you guys watching. I appreciate all of the members of this channel clicking that join button down below. Everybody who's given super thanks over the past few videos. Thanks for giving the video a thumbs up. I'll see you guys tomorrow. Check out my YouTube shorts. Give those a thumbs up as well. And as always, invest responsibly, do your own research, and crypto on.